Hello guys, and glad to have you on board again today. Explosive session yesterday in Wall Street. We're going to have to talk about this one. Hell of a mess, and it actually has been all about just talking about a few stocks, basically to steal the same old top 5. So it's been all about techs, all about top 10, and this is exactly what we try to figure out with this week's update, letting you know that early by next week we would have an answer whether or not the investors are willing to sell their tech stocks, and if not, we might be on the verge to accelerate to some very dangerous territories because we're definitely bullish out there. Every one of those valuations is just stratospheric already. And if that's not enough, then what's higher than the stratosphere? It's just, I mean, space has basically no limits in terms of imagination. So we'll see all about it. Today is all about Apple and the announcement they could make, new iPhones and stuff like that, and people expect this to be absolutely staggering, whatever. I don't know what the hell they're going to be inventing more than what they already did. We expect something with a bunch of cameras that makes good pictures, that is making phone calls, but we don't expect any breakthrough scientific technologies or whatever. So I don't really understand all this magic surrounding Apple right now. Feels like a lot of speculations from people who don't really know much about the market. But anyway, some analysts anyhow have been giving higher grades to these things. And as for example, I've seen an analyst yesterday just rising its expectation to $186. I mean, this is just, god fucking damn it. That is adding 50% to a valuation that is already just mind-blowing in terms of any rational valuation. I mean, this is just people putting out numbers out of God knows what, just because, I mean, it's rising. We do have to give some targets to people, and as the previous targets are just as staggeringly stupid, we just have to put something even more stupid than that. So even analysts right now are playing this game of gambling a possible target number for the future. So this is just, oh man, I've rarely seen that. I haven't lived the 2000 bubble, definitely not, but from what I've read out there regarding what it was in terms of psychology and stuff like this, is exactly the same thing. We do have a lot of shitty valuations that are just, when they say just space or whatever, they're not skyrocketing price. This is just bullshit. I mean, yeah, anyway, that's real funny. So we're in a bubble. Of course we are. And this hasn't changed. The question is whether or not we're going to push this bubble one step further to stupid trading. Of course, same old stuff. The context is Trump's bullshit on whatever hope we might have regarding staggering stimulus checks or whatever. It's incredible way of high level of speculation. I've never seen such a thing in my entire career. But of course, my career is limited to what I've experienced so far, and I have never lived a bubble. So I just don't know how far stupidity can go. I have no rational standards on bubblish context. So it's just, yeah, if it has to push one more way, one step further into deep bullshit, then yes, I know it can. So it's very hard for me to navigating this context. I just can't buy these prices. They're just, oh man, just anytime you think about it, it's just, oh wow, if we just start losing ground, we're gonna fall off the cliff very violently. So I just don't want to be in, okay? I rather like to be out. I'm into some stocks, but just, can I buy any such a thing right now? No, even just retracing 40% valuations on more assets would just make them buyable some way, but certainly not into the nowadays territory. So the question is, what happened yesterday? Is this the beginning of something that is going to lead us way, way further than we already have been? Or is this just another bullshit trade in which we go out there, people actually buy into stocks they don't know why because they think the momentum is, or is this just another range boundary in which we get lots of sellers show up and there's just not enough buyers later on to support prices? So this is, of course, the most rational solution to me. Smart money selling into this area because the prices are freakingly attractive, and we might have some bullish demand on those very, very attractive prices to sell. So that would be the opportunity for the smart money to just drop off on some their heavy weighted valuations and let the tech sector fall off the cliff later on, or at least consolidate or whatever. But I doubt we're ready to actually lift off right here. So let's talk about it. First of all, we're going to make a context analysis. recurring stuff, whatever. Okay. So the first thing I'll notice, I mean, just the fear and greed index is far from being, whoa man, that's the end of the market, we're gonna go bullish. Well, 60 is just an average number, so I would rather like say that we had a rebalance into a range because people were getting too much bearish. And as we started to rise prices, the sentiment just done exactly the opposite, of course. Retail sentiment, basically prices rising, they're selling, oh great, that's perfect, let's just rise the crap out of them. The more they're going to be selling is the best, because of course that means they're short selling, which means they have a stop loss and they're ready to buy. Because a stop loss is a buying entry in the market. Actually, it's just buying yourselves out, but the smart money just says, all right, great, I've got plenty of stocks. They want to short sell them, so they're willing to buy them later on anyway. They just made a promise to buy themselves out of the market, because you cannot just be sell and hold. So anyone who sells has obviously a stop loss, which means they made a promise they're going to buy sooner or later. So when you have that, and you know that the retail traders are just the worst possible traders in the world, you just do the opposite and you say, all right, great, they're selling. Let's keep on rising the prices in tiny volumes. Let's just short sell volatility, push prices higher, and we'll get sufficient enough prices. We'll just short sell the motherfucking thing out of their stop loss areas. So I think that the area we're experiencing right now is the area in which a lot of stop losses are triggering. So there might be a lot of bullish support to the market, but what if this bullish support is acted as just profit taking for the smart money? And in that perspective, they would just have pushed prices higher for a week, way higher. I mean, yesterday is one of these days in which, oh man, that wasn't simple to try being a bear. But being out there is just, all right, if they just pushed price higher to fuck every retail trader, and as they fuck them up, we start falling off the cliff very rapidly, what is going to happen? All of the short sellers are just going to get the fuck out anytime soon. Just going to say, oh man, oh, finally I can return back to my entry price. Let's get out. Which means if we now start falling off a cliff, we can be damn sure that the sentiment is going to cross. We're going to have bears starting to cut off their positions, either tiny gains or just at break even if they have the opportunity. And in the same time, you're going to have a surging amounts of buyers, just because they're going to think that now we're trending bullish and that any support is going to be an opportunity for a pullback, which once again, we'll see in the technical section, isn't the case. So it's just at that point, what we have is a third range boundary, and people getting to buy it is just absolutely stupid. Let me be honest, breaking this level is going to be a signal. Staying out there would be a very, very dangerous pattern. Anyway, moving on. So yesterday's intraday session, oh man, just let's not even talk about it. I mean, specifically in the NASDAQ, it has been just skyrocketing stupidity. Elsewhere, it's not fancy anyway. I mean, third range boundary could be showing on the NASDAQ, on the DAX, on Eurostocks, on higher time frames. Now it would be a daily third range boundary after the 4-hour one. And let me be honest, we do build a daily range boundary exactly on the area of the 4-hour one. So as long as we don't break it, and if we build another one in here, that's a seriously dangerous pattern. But we'll get to talk about it. Of course, what happened during the latest few days is just short selling volatility. It has been all about it. We knew it was a possibility. I definitely knew about it, and I actually warned you. That's the reason why I decided to restore my portfolio to just neutrality. I wasn't net bearish, and I think that have been the best possible choice I could, just removing the net bearish exposition, because I saw the smart money was just betting against the dumb money. And in that perspective, that doesn't mean anything is a trend. That only means that they have been just gambling against those who were thinking that they knew what's going to happen. We were in a range and they could do anything they wanted. In a range, we buy and sell and sell and buy. It's just the smart money saw an opportunity out there. Oh, great, they're selling, and they're selling cheap areas in a range. They're selling closer to, or in the lower portion of the range. Let's just push price in the top area, and they're going to sell. And they're going to sell, 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 and sell more. And then when we'll reverse the prices, they're going to buy, and buy until we actually figure out the outcome of this range, whether we break it up or break it down. But until then, we're still in the range. And yeah, even though the momentum isn't that good for the bears, let me be honest, when you have a 3% session with an upside gap and a weekly gapping structure, you definitely don't want to short sell that. But does that mean you want to buy it? No shit, Sherlock, I don't want to. Okay, so anyway, in terms of catalysts, not that much to expect today, even though the core CPIs could be a game changer, but we don't expect huge changes out there. Regarding the bond market, once again, it doesn't nearly follow bullishness in the stock market. So yeah, I still don't yet understand what the hell happened yesterday, and we're going to try figuring this one out with the technicals. Okay, in terms of technicals, as you can see, yesterday is just, oh man, all about the top 5. Okay, these are the gray lines you see in here, and oh, they're all the best performers yesterday by far. Of course, this has been pushing the Nasdaq into some very, very stupid territory, and as you can see, the S&P 500 is standing still as the Russell has peaked pretty well. So yeah, let's try figuring out what's at play. I would say first we have a look. Oh, sorry, that's not what I want. What I want is changing to this chart. Okay, so the first thing we're going to talk about is the European sessions. Okay, so Europeans right now might be on the verge to build a very nice 4-hour time frame range boundary. Sorry, I misspelled it on the first. On the context analysis, we had an H1 third range boundary in here. Okay, we might be on the verge to build an H4 toward the same levels, which is building 2 time frames in the same level third range boundaries, which is generally a huge enlargements of range pattern, which means we would be now in a 4-hour range, which is going to last much longer. But if you got me right, that's exactly what we've been talking about for the crypto sector as well. Just like I think it's the same for Wall Street. We've been breaking out of H1 time frame ranges, okay, just to probably set course for a 4-hour range. End of story. And I think that what we're experiencing right now is a market that has topped out and will probably do something like that, okay, and then that, okay, and then try to rise again, and then slowly but steadily. Okay, I don't expect the market falling rapidly off a cliff because there is so much volume to get to work around in this area. And I personally think that the only thing they can work this out is just by not selling too hard, not buying too hard either. But I think the most probable situation is just to stay there before we actually fall off the cliff later on. In a huge, same thing, okay? Same thing like that in the opposite direction. We'll see all about it. Until then, okay, we're locked out in here with a breakout pattern. The question is whether this is a trend breakout or range breakout. I certainly don't have the answer, but as long as we stand below the previous historical tops, I'm not willing to say this is over yet. So I took a tiny trade yesterday in here, very not good trade. I really have gone into a 3-minute entry, but it didn't. It nearly worked out. It's actually the point in which the market decided to accelerate. But I don't think this trade is bad in any way. And yeah, my current forecast is just, okay, I'm going to wait to see how these things plays out. I doubt there is any bullish momentum remaining into this market, and we're actually going to have a keynote today in which I don't expect any breakthrough technology, but more just another bullshit of people getting to say, all right, I'd rather like to buy an Apple stock rather than an iPhone, I'm going to get richer. Okay, so if that's what you think, then that's not what I think, and I think sooner or later I'll get your money if you think it that way. But anyway, it's all about patience, and the problem is I do have short selling trades onto Apple, and some of them is a reinforcement position out of 115, which is at very deep risks right now. My first entries are higher prices than now, so I have no problems with that, but the thing is that I reinforced into this area, which doesn't please me so far, because of course that is what's going to bring me down. I had 60 shares out there and I added 20 out there, and that certainly isn't going to make it work. So now I'm waiting to see if today is going to invalidate yesterday's bullshit, which is fairly much probable. And if that happens, that would be just the 2 sets of waves. We're tracing the classical 61% inside the context, which means a bearish third range boundary would show up in the 4-hour time frame, and then, which means we'll break these low points. And my big questions right now is whether or not we're going to hold on valuations below 100. Are we going to find buyers in here, or are we going to trigger a crashing pattern? Because once again, if you zoom out to the larger time frame, these things are not trends. These things are bubbles, and when bubbles pop, this isn't pretty, which means everything we've built to go up there isn't any such a thing as a support. It's just going to be a market falling off the cliff. So are we going to keep on playing the pattern in which we buy the previous market top, which is exactly what Apple has been doing for a very long time? Are we going to do this one more time, or is this just the time it's not going to work, in which people will get to buy in here and will get lower? I definitely think that's what's down the corner, but I can't tell for sure. And the difference between a smart money manager and a dumb money manager is that the smart money manager never knows. And I need to be honest, I never knew, and I never know now as well. And this is what makes the difference. I see a lot of people who think they know the future. I goddamn don't. And let me be honest with that. I tried to short sell Apple, and if I'm wrong, I'm just going to accept being proven wrong, getting the fuck out, and try again later. I also know that those who are betting on the buy side right now will be wrong one day. The problem is that they probably won't accept that, and they'll keep on fighting against the market. And this is where I'll take the money. So until then, we're in a range, and that's a third range boundary, and you know how much I love those third range boundary, because they're going to tell me what the smart money is doing. Are they selling Apple? And if they do, that means they're certainly not going to buy it out of 80. But yeah, are they actually selling? That's the question I'm trying to figure out. If they're not, then there's not even a point trying to be a seller out there. We're going to push prices higher and higher, and there's no limit to imagination. I've seen some analysts showing off a target of $186 per share. I mean, can you just imagine that thing? How stupid that is. Yes, that's totally stupid, but that's the way I think it is. That doesn't necessarily mean it is. For some people, yeah, 186, let's just go out there, okay? That's possible. In terms of momentum, everything's possible. Why not going 500 eventually? So all of those things feels pretty stupid to me, because they actually doesn't reflect nearly anything as the reality. Increasing 50% value of an asset over just a year, out of what? Out of nothing. I mean, we'll see what's in this keynote, but either they actually created something new, or this is just the usual bullshit. This is commercial stuff, trying to sell stuff to people without nearly changing the world. I mean, Apple did change the world, yes, and I'll be glad for this for a long time, but the thing is that they're not inventing anything for a long time now. Chinese cell phone companies definitely took over in both price and competitivity, so I see absolutely no reasons that Apple could work this out a second time, but I'm always open for new stuff. So we'll see. I'm not going to look at the keynote. It doesn't feel interesting to me, but yeah, I'll have a look at the feedback, and more importantly, I'm going to have a look at the prices. So prices will tell me if investors care about this new iPhone, or if they think this is just another bullshit, and that the fancy stuff is just gone out and that the hype is terminated. But those hype trades and those hype stocks, they all have an end, and maybe this is the one that's coming. Eventually it's not, and in that perspective we're going to push higher, and I'm going to try again into the next price area. Until then, I wish you guys a pleasant trade on Apple. No, sorry, please don't trade Apple, god damn it. Listen to it. That means short selling a bubble. This is the thing that only professionals can do, and let me be honest, I gave you the numbers. I mean, 80 shares for me is just scratching the surface. I'm just getting in Apple, so I'm just getting started. If this thing validates, I'm going to go way more than that. Until then, I'm waiting for potential validations, which so far didn't came, and if the invalidation shows up, I'm going to accept it. That's what it is, no more than that. Same thing goes for the stock market. I'm still slightly net bearish right now because I was totally flat and just got into an additional early trade yesterday on the NASDAQ, but just one trade, and it's not a big trade. So if I have to get out, it's probably going to be a tiny loss, but this loss is going to be rapidly compensated by the upside and bullish trades I have. So yeah, all I have to say is that I'm not really being pain traded right now. So much people think, all right, Phil is short selling, so oh, the market's going up, is probably ruined. Well, I am not. I'm sorry to say it. I'm actually making money right now. So maybe not immediately, but the cryptos were rising yesterday. I have lots of cryptos. Yesterday, USD/JPY was consolidating. I have a quite leveraged position into this. So yeah, actually, my personal portfolio is pretty flat right now. So yesterday has been a bad session for me. Of course, I didn't make money yesterday, but I didn't lose it all, and certainly far from being such a thing. So yeah, yesterday is just bad because I thought it was the opposite, And of course, I wish it could have been. I would have made money in the opposite direction. But the fact that the USD/JPY has been bearish yesterday, just all by itself compensated everything else. So we'll see all about it, but I'm not a believer, and I actually believe this is just a big bullshit we've experienced. So yeah, try to see what's figuring out within the next few days, but the USD/JPY direction, the junk bonds directions, and all of those things, the fact that the VIX has reached out to a strong support really raises a lot of questions to me. So trying to figure out if we're going to find some trend followers in a proportion that is going to push us to new historical highs, or if that was just a third range boundary bullshit, just going into 4-hour range boundaries, and we're going to start reversing later on. Until then, I think we're going to need to wait for technicals. The 4-hour charts haven't triggered signals and tradable signals yet. Maybe this is to come. Until then, patience is required, and if we break those third range boundary, then out of any selling activity for me, and I'm going to wait for more appropriate timing later on and just let it ride. I'm not going to add to the bullish positions because I don't think that's a rational thing to do right now, even though until then I managed to buy some stuff. I mean, like reinforcing Virgin Galactic, so I still bought some things, but really I think some specific cases, some individual stocks that were providing attractive prices, but certainly not the big guys like Apple, Amazon, who barely even consolidated and think they're already ready to start again. Well, we'll see about that, but once again, don't think you know the future. If you think you know what's going to happen, that means you're not trading. That being said, conclusion. Okay, sorry about the wrong footing structure out there. So just to sum up the core information, whatever happened during the latest 24 hours so far is hard to actually explain because we just reached out to the third range boundary technical area. We do have two sets of waves which we totally favor a reverse out there and a typical third range boundary trade, which just means we don't have yet matured the range, and we're just set on course for a range boundary which will then either build triangle structure or ABC structure, breaking the previous low points or starting to crash. I don't know. The only thing I know is that I'm not willing to buy a third range boundary. The only thing I can do out there is selling, but I don't have appropriate signals. Yesterday was anticipating a possible 4-hour signal, and to be honest, we haven't found any such a thing. So until then, and until I see 4-hour chart signals, I'll do nothing more but just holding yesterday's position because it has a position sizing that is totally appropriate for a much larger stop loss. But I'm not going to add up to any bearish position until I have early validation, at least H1 signals that turns to validation, which so far we might be trying to do today, but we're still far from doing it. So I'm waiting to have confirmed signals, at least on the lower time frames, that the stuff might be eventually about to reverse. Until then, adding to bearish position would be just the stupidest things to do. So I'm yet very tiny little net bearish right now, and I don't feel very comfortable with it, just like I would be fairly uncomfortable buying the area. So I'm not buying, but I just can't sell out of any signals. So waiting for more information is what I'm doing right now. And the only question I have to work out today is what the hell am I going to be doing with Apple? Do I need to get the fuck out, or do I need to reinforce positions after this keynote? I'm going to try figuring out this answer over the latest 48 hours, and I'll let you know, of course, probably inside Discord or eventually within this next recorded video. Until then, yeah, I need informations, and all I have is hopes, dreams, and mixed feelings here and there because I don't see the smart money buying right now. Fear and Greed is not into buying territory, just like in my personal feeling, a lot of contradictory signals comes from the correlated assets I'm having a look at. The VIX, the VXN, the NASDAQ to Dow Jones ratio, all of those things, the silver and gold pricings, the WTI's pricings, all of those things doesn't suggest the market is going bullish, just suggests we have a lot of mixed feelings. So all of those things may be orientating all again into this direction. In that perspective, trends will emerge, and I'll get the fuck out of there. Until then, all I have is just a load of hope into a possible third range boundary tradable area. So signals to the downside, I'm going to short sell. That's not even a question. But until then, I don't have these signals, and I'm going to wait for them. Bye, guys. See you later.